We good? Okay. So thanks everyone for joining us this afternoon, both here in the room and online. I'm going to start with an apology. I'm a bit hoarse. I'm getting over a cold, so I'll try to speak slowly and enunciate so you can actually understand what I'm saying. And before I take a few minutes to frame the discussion, first of all, we've got a great panel to discuss a topic that's, I think, both interesting and relevant, and it's this question of whether digital currencies have a role to play in expanding financial access. So that's what we'll be exploring. Before I frame the discussion, let me first touch on a few housekeeping items. First, just check if you could all please silence your phones. Second, if you're a social media user and you feel inclined to do so and you want to live tweet, that's great, and you can use the hashtag at CGD Talks. And then finally, in case you didn't notice when you walked in, we have two publications available for you to pick up. The first is a publication from the IFC, which came out, I think, last week, maybe the week before, looking at the opportunities that blockchain technology provides for private enterprises in emerging markets. And the second is a paper I co-authored with Matt Juden here for the Center for Global Development on the potential of using blockchain technology to address some long-standing development challenges. I'll say that in my own experience writing the paper, the two biggest challenges were, one, just keeping up with the rapid pace of innovation, and two, separating hype from reality. And I think a lot of us who work in this field trying to understand what blockchain technology means experience this issue. And I think a lot of the excitement and the hype is inevitable. We have a new technology. Like I said, it's rapidly evolving. We already know it can do some rather cool stuff with it. We can transfer value digitally without having to worry about double spending. And there's also the promise of a lot of untapped potential as well. And that's where we get the hype and the excitement. I think a lot of great creative ideas, but also a bit of hucksterism mixed in there. So that makes our jobs as researchers a little more difficult. And on the opposite end of that spectrum, there are those who believe that the technology's potential has really been greatly over-exaggerated. And I think it's fair to say that in the development community, and perhaps in the financial community in particular, and perhaps in particular with those who have spent time working on mobile money, that there's some skepticism about what digital currencies really mean for expanding financial inclusion. So the goal of this talk today is really to unpack that skepticism, determine what it's based on, and try to determine if it's well-founded. So I want to first thank my colleagues from the World Bank Blockchain Lab, in particular Stella Mokan, who's been a great partner for us at CGD in putting together this event, and others. And then one other thing before I introduce the panel is to talk about briefly some definitional and taxonomy issues. And this is necessary because we can debate this later, but I don't think there's a universally agreed definition of digital currencies yet. So some folks use it in the broadest sense, which really just means any electronic representation of value, which importantly includes the currency or the money that you and I store in our bank accounts, right? That's represented digitally. But for our purposes, unless we say otherwise for this panel, I think we're going to use it as a less jargony synonym for cryptocurrencies, right? And cryptocurrencies are so called because they rely on cryptography to generate new units and secure transactions. So we use it in that sense, unless we say otherwise. And then I also want to differentiate between fiat digital currencies, which are those that are issued by a central bank authority or a public authority, central bank or public authority. So we're seeing more and more consideration of central bank cryptocurrencies versus non-fiat digital currencies like Bitcoin, Ether, XRP, and others, which are not issued by a centralized authority and reside on a distributed ledger. Most of the conversation, I think, will focus on the latter, but we'll also talk about the former as well. So let me introduce the panel. I'll start with Elizabeth, since she traveled by far the furthest from Senegal. She's the CEO and founder of BitPesa, which was established in Kenya in 2013 and now operates in 8 markets across Europe and Africa. BitPesa has accomplished a lot of firsts. It was the first company to trade Bitcoin into African currencies, the first to connect Bitcoin to mobile money platforms, and the first blockchain-based company to receive a license from the UK's Financial Conduct Authority. Greg Chen, at the end, leads the policy team at the Consultative Group to Assist the Poor, CGAP. CGAP's played a lead role in advancing financial inclusion, particularly through the promotion of digital technology. And Greg's office is responsible for advancing regulation and policies at the global and national level. Greg has 20 years of financial inclusion experience, including more than a decade of work in South Asia. Andy Devershi is the global head of IFC's FinTech Investment Group. Andy's invested in more than 20 countries for the IFC, and over the last 6 years, he and his team have focused exclusively on FinTech and helped the IFC build the largest such dedicated portfolio for emerging markets. And to my right is Harish Natarajan, lead financial sector specialist for the Finance and Markets Global Practice at the World Bank, where he assists countries in improving safety, reliability, and efficiency of their payment systems. Prior to joining the World Bank, Harish worked with Visa in South Asia at several senior level positions. And the last time I spoke with Harish, he mentioned to me that he had been working in the payment sector long before it was cool. So now it's cool, so we can have whole panels talking about it, so that's what we'll do. The format for the discussion today is we're going to have a first round of questions where each panel will take a few minutes to answer, and then we'll have a broader discussion for everyone to join, and then we'll take questions for the audience for the last 30 minutes. So Elizabeth, I want to start with you. First, I think it would be useful for the audience to get a sense of what gap you were trying to address when you created BitPesa, what BitPesa's business model is, and how has it changed since 2013?
Sure, and thanks for having me. This is a great panel, and I've been meeting with you guys all week talking about this topic, so it's great to see how things have advanced, the conversation's advanced in the last few years coming to DC. So for those of you who haven't heard me say it before, I moved to Kenya in 2009 after a brief stint in investment banking for a few years, paying off my student loans. And the first thing I did was a rating agent for microfinance banks. And what I kept seeing on the ground was these banks taking loans in hard currencies like euro and on-lending them in Ugandan shillings. And throughout the course of the year, it was an uphill climb to be able to overcome the depreciation and pay back those loans. And I just kept wondering, where were the foreign currency, where were the local currency foreign exchange products? Where are the forwards? Where are the swaps? Where is the mitigation, the risk mitigation? And all of the big DFIs, no offense to those in the room who were investing in this space, kept talking about this awesome microfinance products, but it was like they weren't addressing this gigantic elephant in the room. And it's not a sexy elephant, foreign exchange, but it's what I had worked on before. So when I found out about Bitcoin, this is like 6 years later after working with investors in the space as well, I thought about what could we do to create liquidity in the market? How do we become a market maker? How do we have a new entrance come into this market? And I think this is the big thing missing, no offense, gentlemen, from your papers and often from the discussion, which is the big advantage of this technology is that it's very easy for new entrants to come in. Now, not all entrants are worthy of being there, but you do get new entrants to come in, you do get new experimentation. The barrier to entry is a lot lower, and there is an ability to kind of put yourself out there to be a counterparty. So we came in really to provide liquidity and to make a market in what was then called exotic currencies. When Barclays Kenya calls Kenyan shilling an exotic currency, you've got a problem. When you can't buy the currency of your biggest trading partner, you've got a problem. When you can't buy your neighboring currency once you leave that airport, you've got a problem. So how are we going to build microfinance portfolios or banking portfolios or import-export economies without those foreign currency products? So BitPesa started out in Kenya making a market directly into Kenyan shilling. So anybody in the world who had Bitcoin could send it to me and then immediately pay out in Kenyan shilling. We then realized it was hard to buy Bitcoin in Canada or in the UK at the time. So we thought, okay, well, what if they pay in, as is elaborated in the paper, what if they pay into a local broker in Canadian dollar? The broker and I move the money across border in Bitcoin, and out it comes in Kenyan shilling. Fast forward, we've expanded across the continent, and we're a market maker, which means we don't use Bitcoin when we pay between Nigerian naira or Ugandan shillings, but maybe we sold or bought Bitcoin to get us that liquidity, so we do use it as a tool. But when I want to make a payment to Japan, or back to Canada, or to Argentina, or to France, I can use more brokers. I don't have to only use the bank or myself. I suddenly have the ability to use 30 other brokers who are offering liquidity in that currency. And a lot of people freak out and say, well, what if the existential growth of Bitcoin doesn't equal the need and blah, blah, blah. It works right now. And it's been working for 4 years, and I've got a lot of data to show that it works. So I think for right now, for experimentation, there's a lot of cool things that could be done in the foreign exchange market, a lot of innovation, and a lot of new market entry. Previously, I would have been at Credit Suisse, and they would never have considered a 30-year-old startup founder in Kenya to be a counterparty. But now I can trade on that level with a lot of counterparties around the world. Now, not every company that started out like I did has made it to that level, has gotten the license and compliance, but a lot more have. So that's what we're doing at BitPesa right now. And when we started out, mainly our customer base were individuals. Now we work, 80% of our volume is for businesses. A lot of them are remittance companies and money transfer companies, so we're still serving the same need. And I don't know if Dilip Rata and Sonia Morgan have done so much research on this and talked about how do we get rid of the excess and the operational cost, and that's really what I still focus on. How do we lower the cost basis? So yes, I'm not handing out the dollar amount to grandma, but I am lowering all of the infrastructure costs so that the other companies can do just that.
Great. So Greg, CGAP's been at the forefront of using digital financial services to advance financial inclusion. Does CGAP, yet have an institutional view on the role of digital currencies?
Well, I think it's first of all, I think there's a big role, but I think the important thing is in the detail of how we're beginning to define digital currencies. So, if we were to start, I think at the beginning you mentioned the difference between fiat and non-fiat currencies. So, I think in the space of fiat currencies, if you were to look, we've had at CGAP we've had a standing hypothesis about e-money or issuance of either bank-issued or non-bank issued very small value transactional accounts. The shorthand for that is e-money or mobile money. I mean, there are many different terms. Sometimes it's a bank issuing it, sometimes it's a non-bank issuing it, but it's a fiat currency, and it's often for a domestic use case, right? It's usually a G2P, a government-to-person payment, or it's a P2P payment, or it's a person-to-business payment. There is a domestic use case, and I think the evidence is very strong, has been for a decade now, that can, and in fact, I'd say in almost any market, we'd say that that's a really important enabler for financial inclusion. If we start to move into a couple different realms of what we're calling digital currencies here, I think there's the non-fiat side of things, and then I think there's a separate question around the specific technologies of crypto and distributed ledger. There, we start to get into some broader questions. I think it's a little bit harder to say right now that that's having a dramatic impact on financial inclusion, but I don't think we should close our eyes. I think there's lots of stuff happening on the edges of our world that's going to come in and disrupt some of the things that are happening in the markets that we care about. I think for CGAP, I think our view is we don't know, to be honest. I think we sort of have a watching brief on a lot of it, and we're frankly trying to figure out a lot of it. I think the use case that BitPesa illustrates, though, is an important one, and I think the use case is really a cross-border one. And in today's world, where you're seeing regulation driving a lot of de-risking, a lot of concerns around AML, CFT, it's becoming, I think one of the reasons BitPesa exists is the friction in some of those cross-border and the complexity in some of those cross-border transactions. And I think there perhaps is, and BitPesa illustrates this, a possible use case there that ultimately could have big financial inclusion implications. But I think it's still an open question for CGAP.
So Harish, I'll turn to you next. So the World Bank's done a lot of work to help us meet the goal of universal financial access by 2020. In your view, what role do digital currencies have in helping us to meet that goal?
Firstly, thank you, Michael, for having me. And whatever I say is not the official view of the World Bank. And in particular, a lot of people smarter than me have opined and have been torn apart in the social media, so I don't want the institution to go through that. So, but I think before answering the question, I think we need to go back to see how we defined the Universal Financial Access 2020 objective. So we defined it as access to transaction accounts. And we define transaction accounts as any account which can enable a person to send and receive money and also be able to store it. Yeah? So if taken from that perspective, we have traditional bank accounts, and also accounts offered by other licensed non-bank institutions like microfinance perhaps, and credit unions and so on. And then we also have a whole range of prepaid products, mobile money, e-money, and things like that. So, so the definition of transaction accounts was focused that way. And if you look at, try to apply that lens to digital currency, and I think this is very important to define it when we're discussing in this context, I think the jury is still out from that perspective. And the reasons for that is if you go back to the reasons why people don't have access to transaction accounts, the Findex survey identifies a couple of reasons, and the couple of them are the kind of the top three are basically I don't have enough money. So essentially, it's in some ways saying that it is too expensive. I don't have a need to have an account. And the second is I can't satisfy the documentation requirements. In some ways, it is related to the ID question. And then the third question is, it's spelled out again, but it related to the first point, is that it's just too expensive, right? So I think to answer this question, we have to see how does digital currency, depending on how we define it, how does it address these three? I think on the first one, that I don't have enough money to maintain an account, I'm not very sure the current design, more on the front-end side of digital currencies, solve that necessarily. And the second one, in terms of the identity requirements to open an account, I think that again, those barriers still remain, especially if you want to work in this domain of accounts which are legally recognized and so on. Then the last one, it's too expensive. Maybe yes, digital currencies could have a role to play to make it easier to transact and operate. But there again, one has to see the context of people who don't have accounts. Are they savvy enough to be able to deal with some of the interfaces the way they exist today for digital currency, right? Then coming back to the other fundamental reason, if you go kind of unpack the first reason that I don't have enough money and it's too expensive, it also boils down to what is the utility of an account to an individual. And there comes the question of are they able to receive all the payments they receive using that? Are they able to make all the payments they want to make using that? There again, unless digital currencies become so widely used that for the individual it makes sense to have it, it doesn't solve that issue. So at this moment, it seems to be more like a niche product used in a certain context and in certain settings very well, but not in as broad a context as a small laborer receiving daily wages. For him to be able to meet all his payment needs, using that it doesn't meet that. And then there's this big definitional issue, and I think we will come back to that as part of the subsequent questions.
Yeah, I think we'll come back to several things you mentioned. Yeah. So Andy, as head of the IFC's FinTech Investment Group, do digital currencies have an appeal from the IFC perspective? And if so, what is that based on?
So to not add to what Greg and Harish said, which I very much agree with, I'll just add throw a little bit of an anecdotal light. Money, everybody wants the money everybody else has. Money is not like a Ferrari. It's not, I don't want the one that nobody else has. It makes no sense. If you remember anybody who's read Robinson Crusoe, the moment he landed in the island, he threw away a big trunk of gold because there's nobody else to transfer gold with. So money is useless if nobody else accepts it or gives it. So therefore, to add to what we already have as the challenges of financial inclusion, the layer of adoption, to me, for the moment, is premature. So right now, we have fiat currencies that are well adopted by populations, well in use in those societies. If you add the layer of adoptability, I think financial inclusion becomes even more elusive. Now, the other thing that should not be played with, and it's very important, is trust. I personally, as a student of money, I understand the design of the cryptocurrencies and I understand what they mean. What exactly do they mean? Who is behind them? What does it mean from the point of view of inflation, from the point of view of protection, from the point of view of crypto protection, and from the point of view of double spend, from all the points of view that probably everybody who is versed in matters of money would look at money. But if I am somebody who doesn't understand that or is not even interested to understand that, all I care is about who do I call if something happens to my money. What's the 1-800 number or the equivalent of anything? If I can't get anybody on the phone, who do I go to? Which door do I bang if something happens? Now you can imagine if in the case of cryptocurrencies where whoever carries the key carries the safe, that would be a big problem. You can imagine, we have instances in Africa, for example, where people handwrite their PIN numbers on the debit card. So you can imagine now how little security you have. Imagine if you throw away those crypto keys in the open, in public. That money will be gone, and there is no way to get it back. So from that perspective, I think we're adding, in my mind, if we think of cryptos in the context of inclusion, we're adding a layer of complexity rather than taking it away.
Okay, so not to just be obvious, but I'm in Plateau the other day in Dakar, and I see a little girl crying, and I ask everybody in Wolof, like, what's going on, why is she crying? And they're like, someone just ran by and grabbed her 1,000 sefa note, right? So I'm like, this sucks. I give her another sefa note, I continue on my day, right? So we have that problem already in Africa and everywhere else, and in West Africa and Senegal and in Queens, New York, where I'm from. It's easy to sit here and say all the reasons not to go forward, and a lot of time and money has been wasted at lots of institutions on just waiting and what's going to happen. And it's not going to become all-inclusive, especially a brand new technology, without an effort put forward. So where are the pilots? Where is the motion to really, truly test it out? CGAP gave us some funding a couple of years ago, and we did a little bit about it, and at that time we were P2P. But our business and so many businesses in the space have moved so quickly. Every 6 months, our business wildly changes. 2 years ago, we were doing less than $50,000 a month. Now we're doing $13 million a month. You know, so how do we keep up? How does the development world, how do we keep up with the pace of innovation? And how do we give it a fair shot to really understand what it is? If we can't even define it and we have to wait before we define it and come to an agreement, how do we move forward and really what are the tools that these institutions can use to really truly test out whether it works or not? I mean, even the Gates Foundation, which you sent around today, announced a project that's been in the works for over 3 years, and when it finally comes out, it's using technology that's not at the cutting edge anymore. So how do we get through that knowledge barrier? How do we use AI in a development project? How do we use machine learning? How do we get to that point? I think that's the question we need to be talking about as well.
So one of the points that Andy raised was the importance of network effects essentially for money. But I mean, if no other individuals in the world decided to start using Bitcoin and Bitcoin kept existing, I mean, you would still be able to use Bitcoin as a bridge currency for your business model, right?
Yeah, I mean, and today and this last 3 days, everybody's been asking about Somalia. 4 years ago, when I started BitPesa, my first pilot was to go to Somalia. We had the same problem then as we have now. There was no money there, right? There's not one consistent money. You have something in Hargeisa, you don't have it in the south. You have like many different forms. There's kind of like nothing. So, what do you go in there with? I hear Andy's problem. You already have the Kenyan shilling. I'm not going to go replace the Kenyan shilling or compete with M-Pesa. That would be silly. But what about in refugee camps? What about in places in large swaths of Somalia where you don't have anything? What would it look like if we gave out 10,000 phones with a thumbprint? Yeah, I agree. The codes are a horrible UX design. What if you had a thumbprint phone and you gave out some sort of digital token and that was traded? That would make a lot more sense. And it does make sense to use a digital token, digital crypto, whatever, as opposed to mobile money or e-money, because those are usually run by a corporation. And we've seen in Africa, as everywhere else, that can go askew pretty quick. So I mean, I think you have to think of it as like a holistic model.
Yep, Harish.
Yeah, no, I think the question really is development institutions like the World Bank, and then also I'd include IFC and CGAP under the definition. So kind of the question for us really is, what do we advise policymakers, right? In terms of given these objectives of financial inclusion, universal financial access, what do we advise? And I think if you look at it from that lens, the existing approaches, which Greg earlier talked about, and I also mentioned about the definition of transaction accounts, the question is, has that maxed out? Have we reached the potential of that? The answer is no. And there are some gaps which Elizabeth is pointing out, but I think those are because of perhaps some gaps in regulations and lack of regulatory capacity and oversight and so on. And I think those are the areas where institutions like ours are currently focused on. Having said that, and I think it is wrong to look at this whole topic just from the perspective of digital currency. One also has to look at the infrastructure behind it. And that has a lot of applications. including in some of the barriers I mentioned, including I see Shaylee in front of me, including in addressing things like ID. There are potential ways you can do it, and a couple of ways of redesigning the payment systems using the underlying technology. So I think we need, if we take that out, then the answers change. Yeah.
So we're kind of already getting to the next question I wanted to ask, which was both what are the bases of the skepticism in the financial inclusion community, and I wanted to ask Elizabeth how you address that skepticism. I think since we're kind of talking around that, I'm going to get to one of the questions that I think any discussion of Bitcoin, unfortunately, or maybe fortunately or unfortunately has to get to, which is, okay, so there's the Jamie Dimon comments, but let's focus on less bombastic personalities like former chairman of the Fed, Ben Bernanke, who said last week that, excuse me, he was skeptical, and he had a particular view of Bitcoin that the rationale was to get around government regulation and to evade that regulation, which I don't necessarily agree with. But the question is, and then his next point was that he thinks once governments ratchet up attention, that they will deal with the currency because of those concerns. My question is, are digital currencies and regulators on a collision course? And maybe, Elizabeth, you can speak to how you've dealt with this skepticism, and then others can speak to what do they see regulators and standard-setting bodies, how are they thinking about this issue?
So I mean, for everyone like that, Christine Lagarde made some amazing supportive comments as well, and I was going to write back, but I was too busy to your request on your email, and say, why haven't you mentioned that Fidelity is now offering Bitcoin as an investment asset class, or some of the largest institutional investors who are so conservative are doing it. I mean, so it does feel like this constant uphill battle against bad news when there is so much good news in the space. And having worked before in financial regulation and other improvements, like back in the day when deposit-taking financial institutions were a big deal or mobile money was a big deal, I have never felt such an emotional response. I've never been on so many panels where people get really angry. Like it's something about the word Bitcoin or something about it gets people super agitated, and I don't know what it is. And clearly, I've been around and I've seen a lot of stuff, and I've worked in hedge funds, for goodness sakes, back in the day. But something about this technology, I don't know if it's not, and I don't mean to sound like they hate me because I'm beautiful. I don't know if it's because it's so hard to understand for so many people, and it's so difficult that at first glance, if you don't read deep, maybe you get a little agitated, you don't understand it. Or maybe you think it's moving so fast and you miss the train, and therefore you want to just say, and I definitely think some South African banks had that feeling. A lot of the other companies moved forward fast on it, so then they said, well, it must be horrible. But I don't understand. I mean, Jamie Dimon, clearly his company was trading Bitcoin that very day, as Laurishin exposed in Forbes, made a huge short position on. If you guys watch Billions, it was like an episode come to life. So I mean, I don't take anything he says without looking at what's his market position. But why is that the case? And when you look at the regulators, Japan, not exactly a renegade government, has come out with some amazing regulation. The FCA out of the UK, some world-class thought pieces this year about the regulation. I mean, the US government even, the CFTC. So I think for every piece of anger, we've seen some really great advancements this year. And UK and Japan, especially Singapore, the UAE, are all great examples of how we can move forward with regulation. And I think it's a crash course when there's no clarity. But when the clarity comes, and I think any company worth its salt is asking for clarity. They're not asking to hide in the gray.
Greg?
Yeah, so I think sometimes sometimes I think in the Bitcoin world, we're often talking about solutions, but we're not necessarily always talking about problems, and there are big problems. And let me highlight a few for the financial inclusion world. One would be, in a lot of sub-Saharan African countries, these are subscale economies, so there is a need for a lot of cross-border commerce. And I don't mean only north to south. We're seeing just big demand.
Yeah.
Loretta's involved in some of our East Africa work. There's big demand for cross-border stuff even within some of these regional economic zones.
Yeah, huge.
So how do you solve that problem? I think it relates to a second problem. There's big demand on the user side. I think a second problem is that the banking, the payment systems are so weak and high cost that the friction for users is such that they actually want to go out into the informal system, use a less efficient thing outside the system. So maybe part of the solution isn't a cryptocurrency. Maybe it's just a much more efficient regional or national payment system that can drop the cost of cross-border. What does Dilip say? It's 8% globally on global remittances. I mean, that's an unbelievably high cost given how fast money can move. Why does it take, when I move money from one account in the U.S. abroad, it takes 1 month to clear? I mean, I have no idea what the banks are doing with that money. In the meantime, my account in the U.S. has been debited. It takes a month for my account abroad to receive the funds. Where is the money in that process? Why does that, in today's modern world, why does that inefficiency exist? So I think if we start talking about solving some of those problems, I think DLT and cryptocurrency is one possible solution, but I think fixing just the basic systems that we have. Why is it that non-banks can't participate in national payment systems? By the way, India just opened up. Prepaid issuers are now going to start participating in the National Payments Corporation in India. It's going to significantly open up even what is in the fiat realm of sort of the national currency, new players that can actually drive competition for the banking system. So I think there are lots of ways to go at this problem, but I think we should be very clear about defining what problems we're trying to fix.
From my perspective, there's a couple of things that should be always kept in mind. First of all, the right of personally, I'm a big fan of Bitcoin, just so that everybody knows where I stand. A global world doesn't require fragmentation of currencies. It requires a unification of currencies. That's why the US dollar is so powerful, because everybody can use it, everybody can proxy, everybody can think about it. A person in Kenya can think in dollars, a person in Ghana can think in dollars, a person in Vietnam can think in dollars. So if we can get to that point with Bitcoins, then we are pretty good. The other thing is that if a new country comes up, I don't know, volcano in the middle of the Atlantic Ocean or something, a new company comes up and issues its own currency, it's the same as issuing a Bitcoin. There is a new currency in the world. Now you have to deal with it. You set exchange rates, you trade with that new country. If there's 2 inhabitants, you have very little trade. If suddenly it's 2 billion, you have quite a bit of trade. So from that perspective, that currency will be as good or as bad as how many people use it in that island that appeared in the middle of the Atlantic. So Bitcoin, from that perspective, appeared in the universe of internet. And it became a very, very distinguished currency. It had all the characteristics that gold bugs or gold lovers have. That it carries value. If you hold it, it's yours. If you pass it on, it's not yours anymore. And that has very, very big implications for the world of currencies. So Bitcoin was a first in many levels, and it deals with all the correspondent banking issues that Greg was mentioning. That Bank A promises Bank B to make a payment, but it takes 2 months for the ship to get there and the money to actually get there. With Bitcoin, you don't have that latency. You make the promise and you make the transfer, it is instantaneous. So from that perspective, it's a much better currency. Where Bitcoin is a lesser currency in what we are talking about today is how do you convince now millions and millions of people that it is a good currency for them? And that is where it fails. It's not characteristically, technologically, it is not, as I mentioned, to convince them, then you need to put them everything. You need to make sure that they can use it. You need to make sure that whoever they send money to or receive money from also uses it. I always say, what's the value of the first fax machine? 0. Nobody can send to you and nobody you can send to. So unless you get past that and you get the network effects, then that money is very useless. Unless you get through the issues of trust and convince millions of people. We're not talking about 5 people. You can't put them in an auditorium and lecture them in a day. We're talking about millions of people that have taken decades and centuries to get used to their own native currency. Then it becomes a problem of adoption, and then it therefore is not in the inclusion path for the moment. That's all I think that's the argument that I want to make.
How long do you think it took people to start using WhatsApp?
Fair enough. If money was as easy, yes.
I'm not saying that's going to happen. And I mean, listen, I don't think Bitcoin solves all problems. And there's nothing I hate more than getting an email from some random university student saying, Elizabeth, I live in the middle of Ohio, and I know everything about Ghana because I read it on the internet, and I've got this great problem to solve all of Ghana's problems. And I'm like, lose my number. Or like, I'm gonna Bitcoin up the DRC's, macroeconomic policy and blockchain it up. No, I definitely think that it's overused for sure. But if you think about, I do think we have to get to the sweet spot. Is it totally hyped or is it awesome? We're constantly speaking in hyperbole here. I do think it hasn't been given the chance at a development level because it is complicated and regulators get scared by it because it's the first innovation in the monetary policy space in a long time. There hasn't been a lot of cool FX innovations in a while. So I think that's the kind of problem we have to face. We struggled so much with regulators with mobile money. Morocco just allowed mobile money like this summer, one of the biggest economies in the continent. So how do we get past that? And still 12 years later after M-Pesa, it's winning awards for innovation. So how do we get past that? How do you get past with a complicated monetary problem, monetary innovation? How do you feed that through regulators and government programs? And they want a yes or a no, a binary answer. And a lot of these development organizations like Gates Foundation, I remember I used to work with them on vaccines, they couldn't give less than a $60 million check. So how do you do that when you have a blunt tool to use? And I think that's the big problem here because this technology is one for new entrants and it is one for small players and it is one for sparking a lot of innovation. I can't even keep up with all the cool stuff that's happening. And I think how do we get that sparky ecosystem and how do we use those things in development?
One way to look at it is suppose for the US dollar, which the US dollar, call it money ecosystem, the king of US dollars is the Federal Reserve. Suppose the Federal Reserve lowered the regulatory barriers for who can keep, carry, pay, use US dollars, then theoretically we could go to that point very fast because everybody believes in the US dollar. I don't, but everybody else believes. So just to give you completely an honest view, I don't believe in it. I don't think it's the right currency, but everybody else believes. So you already passed the point of trust, and you can convince all the. So the question is, if what is happening with Bitcoin is lowering the regulatory barriers so people can come in faster, then, as Harish was saying, can we do something else with other currencies that are already accepted? Can the European Union allow people from Ghana, from Kenya, from Cambodia, open a EU account and carry euros remotely, without much identification, without much question and answers? Then in that case, then people will say, okay, for me to transfer money from Kenya to Ghana, I don't need to go through a different currency, I'll go through euro. And that is where I think it becomes very interesting. What is exactly the barrier? If the barrier is regulation, then, and it could be a bad regulation, and I'm very happy for it to drop, but then regulators, and that's where Ben Bernanke's point is true, they will catch up. If the regulators today are convinced that the way the monetary system should be monitored is the way they monitor it today, then for them, Bitcoin is another monetary system, and they will monitor it.
It's already being monitored, yeah.
If you want to change their mindset, that's a different story. And there's a lot of work that the World Bank has done, from what I know, to lower the requirements for low-value accounts so that people don't have to prove to it. And you guys have done quite a bit of research. Mm-hmm. If you lower the requirements for low-value account, a lot of people can jump into the currency and start transacting, and the financial inclusion does happen. Sorry.
Harish, do you want to add in?
No, I will just like to say that, like in terms of the way the regulators are looking at this whole topic now, this comes at a time when regulators are very fine-tuned to innovations. They saw the revolution which can come through new models like mobile money, agent-based models, and so on. They're also looking at the impact which remittances have, and so on. So it comes at a time when regulators are very attuned to looking at innovation. So barring a couple of few examples, I think in general, the view which regulators seem to be taking is one of saying, like a buyer beware kind of concept, saying, so beware that Bitcoin is not regulated by us. We are not working towards maintaining the stability of the price of the value of Bitcoin. So if you want to do it, you're doing it at your own risk. And then apply existing regulations for well-defined concepts like if there's an exchange which is going to convert Bitcoin into a traditional currency, then there are existing regulations around that. Apply them to those institutions like that. And we can see that when those are not applied, we have events like Mt. Gox. So very clearly, the industry also sees the benefit of that. And then also, no government wants to leave away an opportunity to tax. So whenever they see an opportunity to kind of classify Bitcoin as a commodity and so on, they want to do that and tax it. And lastly, to look at the underlying infrastructure and see what does it mean for our own operations, right? So a lot of central banks are now thinking about can we move the large value payment systems which we currently operate, can we move that to a distributed ledger kind of environment? And then can we move the government securities issuance process, can we move that onto the blockchain or distributed ledger? There are fine differences, of course, and if can we move that to a distributed kind of an environment? And if we move that, then it means that the settlement asset which we hold, which is the fiat currency, that also has to move. Otherwise, we cannot have these two different worlds. So there is a lot of thinking around those points. So the way regulations are evolving currently is to apply the existing regulatory frameworks and generally taking a buyer beware kind of an approach.
Is the existing regulatory framework, is it an appropriate framework for dealing with this? Something we talked about in the green room. Does it need to be modified to deal with Bitcoin, or does Bitcoin fit in well with the existing framework of regulations?
No, I think the area which is for which some regulatory intervention might be required if Bitcoin has to become widely used would be to classify it as a legal tender. No? So currently, no regulation. Japan, to some extent, has recognized Bitcoin and cryptocurrencies as potentially legal tender, which will then bring in the network effects which Andy is referring to and which I also referred to earlier. So I think those kind of regulatory topics are not being discussed at this point at a wide level. But what is certainly being discussed is about how do you apply existing regulatory frameworks. So that, and then also there are a lot of legal issues which come when you move the infrastructure to a distributed arrangement. Those are being discussed.
I'm totally against the legal tender argument. I think if you want to do it, cool. If not, it's not necessary at all. And I think I was just talking to the IMF team about their agenda for next year. And I was like, what if we just stop freaking out whether is it legal tender or is it not legal tender? What if we have new kinds of things, which we don't know if they're called assets. We don't know if they're ICOs or securities or assets or legal tender. We have a whole new class of entity. And it has some aspects of legal tender, and it has some aspects of an e-currency, and some aspects of something else. It's a movement of value. Do we have to always put it under an existing classification? Why don't we say, what is it being used for, like the use case? And I think in a lot of, well, at least the markets where I work, we have deposit-taking institutions. We have e-money, which is you issue something as if you're Kenya Airways or MTN or M-Pesa. We have foreign exchange, which means only changing legal tender. And we have money service businesses, which move values across border, or transfer businesses that move values across border. And we have digital wallets, which hold all sorts of things. I think within these, there is a lot of the Bitcoin businesses can fit already into those buckets. I don't think we need to say, stop, we need to write something totally new. Everything has to become legal tender. I think that's just such a high mountain to climb. And it would take so long for so many governments to get over that mountain. It's basically, cutting us off at the knees already. I think you can move forward already with a lot of the licensing that's in place. And we've seen the UK and the US and other places have done this. If they want to say legal tender like Japan has done, great, they've got their reasons. If they want to tax it with a VAT like Australia did, and then they removed the tax, or Germany and Switzerland said asset and then removed it. So I think people are still experimenting because we're thinking in the old state. What was email before we had email? What was it classified as? What was an email document? Let's think back in the day when we thought the government said, how could we trust somebody besides the National Postal Service to deliver mail? Will there be fraudulent mail everywhere? And then, now we're like laughing at the idea that something that goes to the post office would be more safe. I think we have to think about this is a new entity, it's a new kind of thing, but it has aspects of things we already regulate and license and legislate on. So you bring it on a use case.
Just to add to what Elizabeth is saying, I agree with the basic point which Elizabeth is making. But we need to go back to the time when email was introduced. I think email, in my understanding, email became very widely used for official business once there was some recognition that that constitutes official records. So when it's recognized that email records also are official records, then of course a lot of businesses move towards
Or
email.
an e-signature even.
Right, and e-signature, right? So from that, if you apply that lens, of course, even without it being classified as a legal tender and so on, there are a lot of things which you can do still with Bitcoin under the existing regulatory framework, as BitPesa has very clearly demonstrated, right? But if you want to really go much, much further, and you want to bring much depth and much liquidity into the market, then you need to have a lot more players, a lot more institutional players entering the market. So currently, will a bank hold Bitcoins? Some of them might do, but will a lot of banks hold? A lot of investment funds hold a lot of Bitcoins? Maybe not, right? And I think that's where I think the question is, to get to that, do you need some kind of...
Why is that the goal?
Yeah.
Why is a bank holding Bitcoin the goal?
No, in the sense like for institutions like yours, for the market to function very well, you need a lot of liquidity in Bitcoin.
Yeah, but you can have non-banks. I mean,
Yes, no, even non-banks, how big can they become, right? So I think that is the, if the industry thinks it is not needed, of course it is not needed, right? But I'm saying, if we need that kind of a depth, then maybe the legal framework might have to change. But at this point, it seems to be working well, right?
Let me see how much time before we start Q&A. Okay, why don't we do one last question, kind of big picture, crystal ball. Where do you see digital currencies in 5 years, and how are they going to be impacting financial inclusion? You can't get it wrong, really. You can.
Where are you starting?
Andy,
Sure.
you like taking long-term views on
So
developments.
my personal view is that we introduced Bitcoin in the world. Not we introduced it. Anybody can introduce anything, but there is significant
Satoshi
adoption.
Nakamoto?
There is significant adoption of Bitcoin because there was a need, right? And that need was because globalization is coming. People want to transact very smoothly across border with a currency or one currency rather than change currencies back and forth. There's many people who want to exit their own currencies. Again, in a US-centric context, and I don't know who the audience is, you probably never had to sell the dollar and buy something else because it never dropped like a
an IRA.
give me a
Naira.
good yeah, didn't drop like a sack of cement, I was thinking, in front of your eyes. But for many other participants in the global financial systems, their currency has. Their lives have been turned upside down. Retirees who have lost everything the moment they retire. So for them, exiting or getting into another currency that is perceived to be more stable or even better, that grows up by 5,000 times a year, of course it makes sense. And of course Bitcoin becomes a table conversation. But I also caution that there will not be thousands of Bitcoins. Again, that's the whole point of the creation of Bitcoin, was to get some, for us to speak one language, right? If we come up with one language every day, then we go into the Tower of Babel. But if we all speak English, then suddenly English becomes a very important language. So that's what we did with Bitcoin. How do we speak one language in commerce? We had the US dollar. We can have gold. If there was somebody was pushing it, we can get with gold much faster than Bitcoin to a common language. We have euros. There's many currencies that are being dropped because the more currencies we have, the more friction we have. The Eurozone dropped so many currencies in our 15 years ago or 17 years ago? So from that perspective, we have seen evidence that one currency makes more sense. Introduction of 1,000 cryptocurrencies, while it may look attractive for those who issue it because they become sudden millionaires, is not going to happen. It's not going to work. But 1, 2, 3 cryptocurrencies that are with global attention make sense. The other path of cryptocurrencies is the fiat cryptocurrencies. So it could be that every country on earth issues their own currency in a crypto form. But once they get down that path, and this is where it becomes very tricky and central bankers don't have an answer yet, they get into non-fractional banking model, where the currency that I have cannot be lent to anyone. So if that's my money that is sitting in that bank, the bank has no right to lend it. The moment they lend it, they've transferred title. So from that perspective, then all the stuff we do with leveraging and monetary policy, that we transmit monetary policy through creation of money, will be gone. And that is where what Harish was saying, that we have other issues if central banks need to adopt cryptocurrencies as their currencies. Issues that are not necessarily issues of adoption, but are issues more institutional in nature.
Yeah, I mean, I'm always careful about predicting the future because these things are being recorded, right? So they play your words back to you later, and of course, every prediction I've made has been wildly wrong. So to me, the one thing I think these alternatives are here to stay because, as I think Andy's rightly pointed out, there is a strong demand for them, and there's a purpose, and people see value in them. I think there's one other layer we haven't talked about so much, but is worth exploring more, which is I think in the financial inclusion world, which is some of the technical limitations of individuals getting access to cryptocurrencies. I mean, there are real processing, user interface challenges for the common person getting access to some of the cryptocurrencies. I just leave that as a... But I think the use case that BitPesa illustrates for us is one that I think suggests a strong use case, which is that with the inefficiencies and problems and barriers of the legacy systems remaining, if we don't fix those, I think the use cases for things like BitPesa are going to become even more compelling. And so the proportional amount of sort of commerce that's going through cryptocurrencies could become much more significant if the existing systems don't overhaul themselves and modernize. I think if we do see a modernization of some of the regional and national systems, I think cryptocurrencies will remain, but they perhaps will be a bit more of an edge player.
No, I'll go last.
Wise.
So I see us not going backwards, right? So I mean, we already have experienced, anybody, by the way, who's run a business using these, it's like once you've lived in Kenya and you've used M-Pesa, there's no going back. You're just nostalgic for M-Pesa anywhere you travel. I live in Senegal now. I had a lawsuit with M-Pesa and I miss it. You know, that's how beautiful of a system it is. It works so well. And it's just so easy. And that's how I feel about Bitcoin. You know, I pay 44 employees in 9 countries in a payroll that takes me 15 minutes. You know, try doing that any other method. Once you use it, you realize, wow, this is so easy. Now, will it be called Bitcoin? Will it be called microphone coin or chair coin or Bitcoin version 7.0? I don't know, but it is going to be similar to this technology, which means that more than one person can use it, and it's not owned by just one corporation. And I'm not a libertarian. I'm not saying that to get away from government. I'm saying that because it allows entrance in, and we can still have rules and not have it owned by one centralized person. And I always tell the story that when there was the Bitcoin fork, or as I call our system upgrade, I traded Ether for 48 hours, and all of my counterparties traded Ether. And the switch between Bitcoin and Ether was so seamless. Literally, we did nothing differently. All of our systems interacted in the same way because although there's a lot of differences between Ethereum and Bitcoin blockchains, it's not really that different. And we all move there together because we all communicate seamlessly kind of in this ecosystem. And I think, and there was liquidity in Ethereum during those 48 hours because everybody was doing it. I think we'll move together. And what I would love to see is I'd love to see these press releases and hype releases about these startups actually come true. And I'd love to see an ECEFA in West Africa. And then I'd love to be able to trade it. If we see an ECEFA come, whether it's...
Can you define that for the audience?
Yeah, okay, so we have the CEFA, which is the French West African franc.
Yeah.
And we have a company that was invested in by Omidyar, put out a press release saying they were going to create an ECEFA. They forgot to ask the central bank, so they got in a little bit of trouble. Wari, which is a really great mobile money system as well in West Africa, also tried to do it. So whether it's going to be done by a startup or a dominant monopoly telco or the government itself, I think eventually we'll see that happen. If they close it off and becomes another monopoly, then I'm sad for the universe. But if they let me trade it and I can provide liquidity and other people can kind of come into it, that's super cool. And unlike Andy, I'm a bit more pessimistic. I wrote my thesis on the euro And if I go back in time and read what I wrote, that it was going to dominate the planet. And we're not seeing that today. And I lived in East Africa for 8 years and hoped we're going to see the East African Union. And you still can't send a real-time gross settlement across borders between Kenya and Tanzania in any real time. So I think although we could do a lot of stuff, we're not doing it. And what we are doing right now is innovation in the blockchain and Bitcoin space. So let's take advantage of this momentum. And I think we're going to see a lot more excitement before it starts to stagnate.
Okay, so I can't duck any longer, yeah? Yeah, no,
You can be brief.
I think I will not take a view on where these things are going to go in 5 years in terms of digital currency in particular. But certainly what we can see, what looks like happening is the central banks are studying this topic very closely. So a lot of issues like how do you control monetary policy, what does it mean for money multiplier, the fractional banking which Andy was referring to, how do you maintain inflation, how do you maintain control over the yield curves and things like that. Those are all topics which the central banks are studying very, very actively. So I think they will figure out a way to handle that in a world where digital currencies dominate. Yeah? Then there are a lot of other use cases which have much little coordination issues, like trade finance, syndicated loans, where the underlying infrastructure can be much more easily adopted. And I think I expect to see some movement there, including perhaps in the US in the mortgage market. If you want to apply for a loan, you can see the challenges we see here. There's already some pilots ongoing in Hong Kong and so on. And then lastly, it's also looks very, very likely that central banks will take a view on whether they want to issue digital currencies or not in the next 5-year time period, because there are active projects which are already underway, and they will very likely take a view. But one thing is very clear, the central bank seems to be very, at the moment, in general, regulators seem to be taking a view of let's see what happens with this technology. So I think that view is likely to continue.
Great. So I have a bunch more questions, but I want to give the audience an opportunity to ask theirs. So we've got about 25 minutes. We're going to have some microphones going around. So if I just ask, if you raise your hands, we've got the first two here, and then Loretta in the front, 4, and then we'll try to get all of you. And if you could just let us know who you are and your affiliation before you ask a question, and try to keep it as a question rather than a statement if possible.
My name is Arata from IFC. Thank you for the panel. I'm curious to know, Elizabeth, your view of this ecosystem development compared to the history of M-Pesa ecosystem development. I hear this very same discussions back in 2006-07 around the time for M-Pesa or those conventional mobile money players in the early days. And then you mentioned M-Pesa is great now. It took so many years to get there, right? And then if BitPesa or any cryptocurrency, for me it looks like just another mobile money player with a different technology. Of course, it has regulatory implications different. But it may, if you see any sort of discrete advantage compared to conventional mobile money ecosystem development, please share with us. Thank you.
Elizabeth, why don't we just take like groups of 3 and then we'll go through.
Hi, my name is Sachin. I'm a postdoctoral researcher at George Mason University. And my question was specifically related to Bitcoin. One, about Bitcoin, we don't even know who really created it as of now. So considering that, how wise is it for entire countries to put their trust into something like that? And secondly, it is about the energy consumption. I was reading that the energy consumption required to mine Bitcoin is actually the size of, I think in the report it was the size of Ecuador. I'm just curious about these sort of aspects in particular about Bitcoin in particular.
We'll take one more up front and then answer it.
Thank you. Loretta Michaels, I'm a consultant and former colleague of Mike's at Treasury. Andy, I was a bit puzzled by something you just said about digital fiat currencies and that with digital fiat currencies, we end up with non-fractional banking and the bank couldn't loan out my digital currency. Well, that, I mean, I don't, I have a hard time understanding or agreeing with that. I mean, with paper currency, I take a handful of $100 bills to the bank. That doesn't mean that those bills have my name on them and the bank can't loan them out. So why do you say that is the case for digital currency?
Okay. Yeah.
So M-Pesa was already great in 2009 in some ways. It hasn't become this world force then, but it was still pretty cool. There's just one way to describe the differences. Closed, open. Okay, and there's nothing more closed loop than M-Pesa. It is the closest, it's the closed loop of all closed loops, right? It works beautiful because everybody is inside the loop. One of the reasons I started BitPesa was that I kept traveling to Tanzania on missions, and I couldn't top up my M-Pesa from Tanzania. And I was so obsessed with it and needed it for everything, from paying my kid's babysitter to buying groceries when I was abroad. I was like, how do I function when I'm in Tanzania when I can't top up my M-Pesa there, even though there's M-Pesa Tanzania? Those two things didn't work together until Cellulant built a bad API between the two, right? So that was the big problem, which is like, this is InterSwitch, beautiful national switch in Nigeria, success story, IFC investment, works amazing, doesn't work anywhere outside of Nigeria. Even though they bought a company in Kenya and Uganda, it doesn't work the same there. It's just a closed loop. So Bitcoin is different. It is not a closed loop. You can have entrants come in. It doesn't mean that every entrant coming in is less safe. They're all equal participants and can transact on that. So that's how I see the difference. There's many more differences between the two, but that's how I see the differences.
Great.
So I think just to I think draw the comparison, I think there are two other really more important comparisons between M-Pesa and Bitcoin. The first is that M-Pesa, you've got 70,000 agents on the street, and that's how you mine. Okay, so in terms of the financial inclusion reach, we're really not talking about the same thing. Okay, so you got 70,000 people on the street. You can go put cash and mine M-Pesa anywhere, if that's what you want to call it. It's really, you're just switching cash for digital. So that's just a world of difference. The second is that it's fiat versus non-fiat, and to me that's also just a huge difference.
Yeah, and domestic internet, there's a lot of differences. Yeah. And like, what's the use case? That's for literally everyone on G to use it in M-Pesa, and Bitcoin has other options. And there's also the buildable model. M-Pesa does not have an open API despite its best declarations for a long time. So there hasn't been allowed innovation. Innovation can only be contained at a big green building on Wayaki Way. Any innovation must come through there. While Bitcoin, you have innovation in Estonia and Ecuador and Japan all sprouting out and building on it. So it's a very different model. And then I think the question.
The second question, yeah.
How do we know if we don't know?
And governance.
I don't really think it's relevant, because like, if I were to happen upon a code base, I might not know who wrote it, but I can audit the code base. So let's say I just like rock up upon an empty startup space and I go in there and I'm like, anybody home? I can just go in and audit the code base, and if I think it's secure enough, I feel comfortable using it and even adopt it in. And we do that all the time. In fact, I had an interim CTO who was crap. We kicked him out, we looked at his code base, we decided what we wanted to keep and what we didn't. Didn't matter who the founder or the creator was. So I think when you have software-based solutions, I think that's...
Maybe it's a different question between the founder, and maybe it's more of a question of decentralized governance and not having control of the governance of how the coin evolves.
And again, it's about the software. Like, do you believe the rules of the software? The software rules say these are the rules. If you believe the software would follow the rules and will always follow the rules, and you agree to those rules and you're okay with them and comfortable with them, you can play in that space. If you don't like the rules, don't play in that space. But I think for many of us, we believe the rules will be followed because we believe in the software.
No, there was also another aspect of the question about power consumption.
Yeah.
Oh yeah, I forgot about that one.
Yeah.
I can take that one if you want.
Yeah, no, I will just add that this power consumption thing is, that technology is changing so fast, and Bitcoin is also adapting and so on. So I think that issue perhaps will get solved. I think that's not going to be the binding constraint. The constraints are around issues of governance. How do we manage in a world where things get forked so often, so things like that. I think figuring those out is where the issue is, and not so much on the power consumption, which might get sorted out, I think.
But in one way, that's the whole power of the design as well. Because that's the intent. The intent is for this not to be inflationary currency. You can't print it more and more and more, and it becomes harder and harder to issue. So from that perspective, while it may be, we're not talking about transacting with a currency that has been issued, that is requiring that much energy. We're talking
Yeah, we
about
could stop mining
mining
today.
additional
Yeah.
that is requiring that much energy. So which means you are protected. If anybody was lived in an inflationary world, like I have, then that's extra protection given by machines and rules that nobody can change according to engineers. I'm not an engineer, software engineer. Rules that cannot be changed except for the consensus of the majority, and it's very hard to put the majority of Bitcoin users or Bitcoin holders in a room to vote. So then, to me, that's extra protection. It's not a problem. It's a good thing. It's like how easy it is to mine gold. If it was easy, then we all be gold billionaires.
Can you guys clarify technically? So once value's been mined, the exchange does not consume that power.
No.
Okay. The exchange is much faster.
Yeah, if mining stopped, let's say mining stops tomorrow. Let's say there was a global blackout.
Okay.
And mining stopped tomorrow, all waterfalls stopped flowing. You could still transact.
Okay.
And
For
not
one block.
consuming that much.
For one block.
Okay.
And then after 10 minutes, when that block needs to be locked, that requires the power. So you could transact for 10 minutes, but as soon as you want to lock the block, the locking of the block and all transactions within that block, whether it's 10 minutes or 8 minutes, depending on where we are in the history of Bitcoin, that requires energy. So if there was a global blackout and all waterfalls and all hydropower stopped in Chengdu or wherever most of them are, Iceland, and Estonia, and Georgia, then you wouldn't be able to use it.
So
I think the point on inflationary currency and so on, I think those involve a lot of monetary policy implications. I think it is not, I think we should not make general remarks on that. There was a reason why the gold peg was removed and so on. So I think I think there are good things. If the central bank or an issuer can control the money supply, there are positive impacts of that, right? So I think one needs to be careful. A world where you cannot increase the money supply might not be a good world. Huh?
yeah, we won't go deep into monetary theory here, but so Andy, if you want to take Loreta's question.
Just basically the way Bitcoin was designed, and other cryptocurrencies can be designed differently, but the whole point of distributed ledger and Bitcoin was that my money is always my money, and it has my name on it until I release title.
No, but you made the comment in relation to fiat digital.
Oh no, even digital fiat, if you issue it in the way distributed ledger is issued, in the same architecture, then the money that I have is mine.
But the companies that are doing
Unless you deposit it, yeah.
are not
So if I
using the blockchain.
But I can't deposit. There is no concept of deposit in Bitcoin.
Of course there is. I store Bitcoin at exchanges and wallets all over the world. Once I store it there and it's Bitcoin ABCD 1, 2, 3.
But it's yours.
Yeah, but I don't necessarily get ABC 1, 2, 3 back. I might get.
Yes, you do.
No,
Yes,
not
you do.
necessarily. Not in all exchanges. Some exchanges yes, some exchanges no.
Okay, then those exchanges are compromised because the whole promise of Bitcoin is that it is your Bitcoin until you authorize for it to go away.
But you can have different rules. You can
Now-
make any rules you want.
Fair enough. So then the question is, if the Federal Reserve or whatever central bank, any issuing authority, if they issue based on those rules, same rules as Bitcoin, then it is a bearer instrument. And a bearer instrument has an owner. And you cannot spend what I have, and therefore you cannot lend what I have. That collapses immediately the fractional banking. That's what I mean.
What if you give an
So
IOU?
that even kills the need for a bank. So the implications are a little bit more dramatic. I just didn't want to get into too much conversations. But basically, I have not deposited anything. When I own a Bitcoin, it's mine.
Yeah,
So
no, but some of the companies, including the one you mentioned, ECM that did the pilot in Senegal, they are not using blockchain technology. So
okay, then in that case, it's another fiat currency for as far as we're concerned in an electronic form.
Yeah.
It's not a cryptocurrency the way we're trying to define it today, or the way Bitcoin definition is. That's the.
So I want to make sure we get at least one more group of questions. So we've got one here, one in the back, this gentleman here, then you. Okay.
Hi, Lauren Cork. I work for Pan-African Capital Group. We do investment throughout West Africa. I was just wondering if you could talk a bit more about blockchain chain technology in general and how it's used for non-currency assets. And obviously that's valuable in its own right. I know, MIT is doing blockchain diplomas now, and obviously coming in from West Africa perspective, things like having, land ownership, your land deed on a blockchain is incredibly valuable in its own right. But then in addition to that, how that could possibly be the entrance into creating more adoption and trust of the cryptocurrency by building the infrastructure and the adoption using hard assets that aren't the currency. Thanks.
I think there were some questions there.
Yeah, in the back, the blue.
I was going to make a comment, but I was hoping that you would answer this question. But I think the main question of this panel was not answered, whether cryptocurrencies would lead to financial inclusion. And I would like to see maybe a quick round around that. And my answer would be yes, it is. And I think cryptocurrency offers, or blockchain offers, a totally new dimension. I think one of the aspects of it is having a digital wallet on a fixture or basically plain phone, and that which is available to a lot of people in sub-Saharan Africa. Very quickly, we work with a lot of saving and loan groups, and we try to work with we basically collect a lot of data about their savings and so on. They're not exposed to banks, to financial institutions, and those financial institutions in African developing countries are just not built for this business model to provide loans and so on. The bottom line is this. I mean, it's a long story, but I'm trying to summarize it. I think blockchain has the potential in transforming the lives of many people by having a digital wallet. Basically, you have an account. It's similar to probably all of us here that have either an ATM or a credit card, and with that, you're able to transact. And I don't think Bitcoin would be the answer. I think Bitcoin is a great currency, but what's happening with it is more it's becoming a speculative and investment instrument rather than a currency for transacting and exchanging value. And what is needed in sub-Saharan Africa is a currency, a digital currency or a cryptocurrency, blockchain-based, with a digital wallet that's available to the masses. And it's possible. I think it can be done, and it will take some time. I think WhatsApp is a great example.
So maybe my recommendation, we'll take the last two questions, but maybe we'll finish with his question, which was something we did kind of skirt away from. It's what does this technology mean for financial inclusion? So we'll end with that. But we've got these two, yeah. Sir, you go ahead. The order doesn't matter.
Quickly, my name is Germán Mundaray. I'm from IFC. What lessons can we draw from history? It's not the first time that a monetary system has been introduced and adopted as well. Introducing the paper money in China, moving away from the gold standard. What were the challenges? What can we apply today to solve the problems? Perhaps any of you can comment.
Hi, my name is Karol Karpinski from the World Bank, and I've got a question specifically for Elizabeth. Well, a lot of countries in sub-Saharan Africa where you work have exchange controls. And I was wondering, what's your opinion? Will the popularity of companies like yours and cryptocurrencies lead to lifting of those exchange controls because they'll become ineffectual? Or on the contrary, will it lead to further crackdowns on Bitcoin exchange or crypto exchange like in China? Thanks.
So maybe we can take those in order. I don't know if anyone wants to comment on the first question. Non-currency related uses of blockchain technology and what that means for
so maybe let me, I'll start, I'm sure others will add. No, I think fundamentally, if you look at the underlying infrastructure, it allows you to do things in a decentralized way, in a peer-to-peer way. It allows for maintenance of immutable records. And then, of course, the other point is there's no central entity which is kind of controlling things, right? So now these attributes are applicable in a variety of situations where this might be very useful. One example is there was a very famous discussion about how Walmart was able to trace where a particular pack of, I forget what produce it was, where a from where a particular produce came by being able to digitally record the provenance all through the supply chain and being able to see that. And the way they could do it by utilizing these three features. No? Kind of at each point, a person can record it, it's not changeable, and everybody can see the same records and so on. So I think that's one area. And a similar application could be in trade finance. And the first example I gave, that is applications in if you want to see where your cocoa came from, blood diamonds, and so on. And then lastly, even for maintaining your own control of your identity, like if you can record information about yourself and control it and release it only when needed to people and counterparties, I think that could also be another application where non-currency applications of the underlying technology.
And there's a really cool startup in Ghana, if you Google land rights blockchain, that's doing exactly that. I forgot the name, but if you ask me later, I'll find it.
That's in Georgia.
Ben, exactly.
Greg?
Yeah, just quickly on that one. I mean, I think at CGAP we've probably been a bit more optimistic about some of the non-currency. So we're actually chasing some work in agricultural value chains where a lot of people across the chain can see what's happening, and so people are better able to establish their creditworthiness and document financial and other transactions. So that would be one case. I think Harish has already mentioned ID. I think some people are chasing small businesses and how to document and some of their sales and revenues much more easily. So there's quite a few applications. We actually fairly optimistic about the contribution to financial inclusion of those applications.
I will make a plug that the CGD's paper looks at uses of blockchain technology, including payments, but our focus is really outside payments, including land rights, digital ID, which I ended up kind of skeptical on that particular use case. It's very hard to generalize across use cases, I think. But to your point, I think familiarity with the underlying technology, it's using it in other cases might help folks become more confident going forward. And then the second question was?
What lessons can we draw from monetary history? Yeah?
Okay.
Okay.
Our historian is here, yeah.
The hard one. Leave it to the venture capitalists to explain history. Well, the latest major issue release of a new currency was the euro, right? So every time you release new currencies, one of the biggest issues that you've had to face is how do you make it legal tender? How do you make it the dominant currency of that? So the power of the sovereign is very important in those. So Euro decided that they will issue a euro, and if you held on to your beliefs that you should have Deutschmarks, you would be bankrupt. So there's no options, right? So when the sovereign decides that. Now, what happens is with private monies is that you just don't have that power. So when you introduce a new private money, that money better be better. Otherwise, the adoption disappears. There's no way for people, there's no reason for them to go to it. So if that money is better, as in the case of Bitcoin, now whatever better is, better could be shady. I don't want my money to show up anywhere. Well, that's better money for me. I want it to be faster. Well, that's better money for me. I want it to be, I don't know, I want it to be outside of the reach of a central bank that they cannot inflate it. That is better than money than me. So whatever money is better, then you are relying on the characteristics of the money to adoption. The other way, the sovereign money was easy. If Kenya wants to decide to take 3 zeros out of its own current currency now and introduce a new currency and call it a different name, they can do it overnight. And they've done it overnight. Turkey has done it. My country has done it. I'm sure lots of countries do it as a regular basis. So from that perspective, that is where the big difference is. Now, what other implication it has? A, is the banking system is forced to stay in line, right? Central banks, besides the power of having the power to issue the currency and manage that currency, they have the power to manage everybody who deals in it. So from that perspective, they tell Bank of America, you have to accept the new dollar that we just issued. You have to, otherwise I take your license away, right? There's nobody who resists the power of central bank. In these currencies, that's a different story, very different story. So I'm sure there's 1,000 other implications, 1,000 other things, but that's the big one. How do you adopt it?
I think you also have to just understand that's a traditional definition of legal tender. And if we go forward and we have different gradations of legal tender, aspects of legal tender, but not all of them, in new classes of money or transfers of value, we're entering a new universe now. Mobile money has some aspects of legal tender and some not. Loyalty points, Amazon points, Alipay points. When your tax IRS refund can be designated in Amazon points, we're entering a new place. Is Amazon the first? Amazon points are the first non-government digital currency that's widely traded. It's bigger than the GDP of many small economies. So there's a lot of new frontiers that we're moving here. Should I go into the next question?
Sure.
So go ahead. Maybe just to add to what was said, or in response to the question on monetary history, I think there are a couple of points. Firstly, if you study the history, it's very clear that there's a need for having confidence in the money, and the moment public doesn't have confidence in the money, you can see what happens, right? The second, there is also lessons you can learn in terms of what is the power of having control over the money supply, and what is the kind of economic impact if kind of central bank loses control of the money supply, right? And then the third point is about what makes it useful for individuals to hold on to that currency in terms of being able to use it for multiple transactions and so on. That's the other lesson which we can learn. Now, we talk about legal tender, cryptocurrency and so on. What we need to recognize is the concept of private currency or a small different currency running alongside a fiat currency has been there for some time, for years. There are some cities which have local currencies, which is used only within a particular context. There are cases like Amazon points, which can be used only within that. What is really different now is that this has no backing to a fiat currency and so on. So that world has existed and will continue to exist. But this thing about there being no single issuer, that is a different world. That has not been seen before. Yeah.
Regarding capital controls, so we operate in several markets where there are very strong capital controls, and Nigeria, clearly. And I sit on the Central Bank of Nigeria's Committee on Virtual Currency. And one of the first things I said when I came to Abuja several years ago was, we will allow for the easing of payments and trade without using your reserves. Okay, so this is the kind of idea of the matching netting concept that freaks a lot of central banks out. And they have 99 problems. This solves a few of them, not all of them, right? The hoarding of incoming hard currencies that they then disperse at a reduced rate to the people via remittances. Okay, that stops with this model. But the reserves that they do have are also not touched. So when we spoke to the BCAO about it, the same thing happened, which was, I will collect franc CFA, I will make a payment abroad, I will then distribute that franc CFA back in. So I'm net zero. There is not a total flight of capital. My business model doesn't work unless I'm attracting business to the market with additional services and lower costs. Now, when I was at the IMF the other day, they were like, well, this is the reason you have reserves, right? Well, this is some of the reasons for reserves. So let's go into the definition of why we have reserves. So, maybe there's going to be a new definition. Maybe some aspects of why we have reserves will be kept and some won't be kept. But is it better or worse to scare companies out of the country? So I think we have to understand, is there a middle step along the way? And I think when we get to the place where you have Pan-African trade, imagine a world where we have South-South currency pairs, and we're going to have liquidity that doesn't always get priced through the US dollar. Imagine that paradisical world, and then at that place, do we need to hoard just one currency as a reserve? Will we have multiple reserves? And the idea of that will change. So I think some countries are really quite excited about this as an experimentation model. Now, if I was doing 99% of the GDP, I'm sure we'd have problems. But as it stands so far, every bank that I've approached and that we work with that has had currency controls has embraced us. And actually, the new draft legislation states that the virtual currency payment exchange rate will not be controlled.
So we're running out of time, but looping back to the second question that was asked, we've kind of skirted away, talked away from the real issue of financial inclusion. I mean, everything we're saying has implications for financial inclusion. Is there anything you want to leave the audience with in terms of thinking directly about how this technology is impacting financial inclusion or could impact financial inclusion?
Who are you starting with?
Anyone. This is a free, and not everyone needs to answer.
Well, I go back to what I said at the beginning. I think, listen, digital currency, fiat currency has changed the face of financial inclusion already. It is changing the face of what's possible. I think the question is the non-fiat and the cryptocurrency. I think we're all open-minded about that. I'm not sure we see the evidence yet that it's going to change financial inclusion. So I'm not sure your scenario of everyone with a blockchain version of a digital wallet. I mean, I'd go back and ask the question: what's not happening today that you think blockchain would help solve? I think there are some things that are already happening, even without the advent of blockchain. So I'd say. Where do I come? I think we're open-minded as to the possibilities. Let me leave it there.
I will stay with Greg that if people move from money to money or money regime to money regime when they see a need. So for example, you could argue that e-commerce was a much bigger driver for financial inclusion than a lot of the hoopla that we've been saying in Washington all the time. That is because somebody wanted to buy a razor on Amazon, and that's the only way you can buy a razor on Amazon is to have a bank account, and that's it. Nobody wakes up in the morning and says, I want a bank account today very badly, and today is the day. No one in the world, no one that I know of. But I want to have that. Now, if Bitcoins increase that use case, so suddenly everybody on earth becomes aware that if you invest in Bitcoin today, you become a multi-billionaire tomorrow, then maybe everybody will want to say, I want electronic money to get Bitcoins. Then that's the only thing that I see as a difference. I don't see anything else from a driver.
Okay, I conservatively estimate by 1 trillion% that we're going to see apps and technology like WhatsApp be the future for financial inclusion. So mobile phones will penetrate. If my illiterate housekeeper can use WhatsApp right now with the voice recording and find recipes through Google when, 5 years ago, she didn't even know what a computer was, much less a mobile phone, with no training. And I've seen so many people in so many places across sub-Saharan Africa adapt it so quickly before anybody could even type the word. I think WhatsApp will be big. It's already there. So we've already seen the largest acquisition, the fintech acquisition right now, and Alipay and Naspers are all moving big into this space. We're going to have digital tokens transferred on these platforms for sure. And will they be the eCefa? No, because that's not traded globally. Will it be the M-Pesa? No, because Vodacom's not in China. Will it be something that's tradable both in Asia and the rest of the world? 100%. Does it have to be moving as seamlessly and interacting on a digital level? 1,000%. Yes, could all of the regional hubs in Africa and Asia get together and create their own regional payment systems? Hypothetically, yes. Will that happen in the next 5 years? Hell no. So I think, could it happen? Yeah. Will it happen? Very unlikely. The fastest moving people right now are these mega internet companies, and they're going to use something that works for them, and that's going to be eventually interoperable between them. And I think that's going to be some version of a digital currency, and that will then, I think, be the miracle that breaks through, conservatively.
Harish, yes, that's pretty bold. Thank you. We like boldness. Harish, you get the last word.
Yes. No. I think the person who was asking the question was trying to draw a distinction between Bitcoin and was talking generally in terms of cryptocurrencies. No, I think one has to see what that variant of cryptocurrency is, right? So if you're talking about a digital kind of a fiat, kind of digital fiat currency, it's not very clear. But what I think will certainly happen is there are certain usability challenges with the cryptocurrencies today, and I think that will very fast change. And we have seen how technology can make usability easier. So I think that is certainly going to change. And then also, as I mentioned earlier, several use cases which are using the underlying technology. I think that we will see more and more of that. But digital currency that on its own having a direct impact on financial inclusion, that I don't know. I think it's very difficult to say yes or no. But indirect, there are several ways it can indirectly impact positively.
Great. We are running a bit over, so I'm not going to try to summarize the discussion, but I will say thanks to our panelists. I think it's been a really good discussion. I think we ended up with more questions than answers, which might be a good sign. And we could have kept going, but it's good to have a limit. So thank you to the panelists, and thanks to the audience. Thanks very much.